Welcome to Investors Insights. Our topic today is don't stop the music. At this point, the market still has plenty of momentum. We're seeing earnings going. Here we are starting the holiday season of November and going into December. We've got a party going on in a lot of aspects. The music's playing. Don't take the punch bowl away. There's a lot of analogies that we could use. Everybody agree with me on that?
Yes.
Now, Bobby, you started off really positive in our discussion this morning. Talk about inflation and easing.
Yeah, so good news from the Fed last week. They expect inflation to remain muted over the next couple of months. That's good news is because that will be a luxury to the Fed, and they can run the economy harder than usual without inflation running away. And so that's great news. Again, good news, we've seen good liquidity. We've seen good money supply. Money supply is up 8% annualized over the past 13 weeks. What that tells us is easing is working. That's great news. And so the good news for the market and that you've got an accommodative Fed, continue easing is working, and then a good consumer.
Let me say one thing here, though, but we don't want to be overly optimistic, so we don't want to give that impression. We're always watching the details. But when you say easing, not all our viewers are economists here, and so I think we need to explain that.
I can kind of dig into that a little bit more. So since August, the Federal Reserve has been expanding the balance sheets.
Okay.
It's the most uncovered news item in the markets by $300 billion. Since the end of August to now, the Fed has expanded their balance sheet by $300 billion. What that is, that's buying bonds, taking bonds off the market and putting cash into the market, which is liquidity. That's what people use, easing. So they've cut rates 3 times last year, and then starting in August, they started buying bonds at a rate of $300 billion. And so that's a huge amount of easing. And since then, you'll notice the S&P has gone from a low in August of 2,822 to 3,113. And since that time, the China trade talk has been definitely back and forth. I think it's better than maybe the worst case scenario, but we still haven't had any resolution. So what's that telling us? The market is saying, which is more important, Fed liquidity or China? Obviously, it's the Fed.
Right, and I agree with you on that. And also, where have the headlines been? It's been on the China trade wars.
Exactly, and that lasts for about a day, and then the market kind of seems to move on and matriculate higher. What's causing that? $300 billion since August.
Sure.
I mean, that's pushing markets higher in spite of the China trade talk, and the Fed seems to have the power, like they did last year. They took the punch bowl away right before the holidays.
Oh, yeah. We all remember December.
That's right. Yeah. Or musical chairs analogy, that the music stopped and there weren't enough seats.
That's correct.
Hopefully the Fed will, and like Bobby was saying, with interest rates being down and inflation being down, the Fed will not have to stop the music.
Right. And through our vlogs, we've said, okay, yes, China-U.S. trade wars, that's the talk, but there are other things occurring, and that's a positive.
Right.
That's a big positive there. And then actually you jumped in also to talk about something else going on behind the scenes, behind the China-U.S. trade wars. Everybody's focused again over here. What's the positive on companies spending money? We talk about consumers spending money. Bobby's elaborated on how people are buying and spending money. And so talk to us about corporate America.
Well, some of the Federal Reserve data over the weekend that we were tracking is saying that, as Greg was saying, that these large expenditures companies do have kind of been sorted to the side a little bit on the Chinese trade talk. But the Fed was saying in their interviews with CEOs of companies, they're saying, look, these large projects are not off the table. We have not canceled them.
Okay.
We've just delayed them a little bit into 2020 and 2021. The two primary reasons we were talking about this morning, the U.S. CMA, United States, Canada, Mexico agreement.
So those negotiations are still going on and it needs to be voted on.
Absolutely.
Is that correct?
And the Fed was saying that they feel like even with all the political rancor, that could be passed within the next 6 months. And that's a huge uncertainty rock taken off of companies.
So this is the old NAFTA is now looking at new ways to do trade with those companies.
Correct. That's exactly right. And these projects are not gone. They're just delayed until that's passed.
Right.
Well, there's
that could
nothing
be a quick turnaround.
Absolutely. I mean, that could give us a little bit of powder for 2020 and 2021 that maybe people aren't expecting.
Despite what happens with China and U.S.
Yes, well said.
So and so all that would be very positive to our markets, to our economy going forward. So as you can tell, we are very positive at this point in terms of fourth quarter. As we continue on through the month of November, we're going to keep you updated. We're going to continue to get you information through these vlogs, our social media, and Twitter, Facebook, and other ways we communicate, as well as just good old one-on-one conversations on the phone and in person. And on that point, a big thank you in this month of Thanksgiving to those of you who continue to share this vlog with others and to help educate others as to what's going on in this market of anxiety. We greatly appreciate it. We hope you have a great week, and we're going to keep you updated. Don't stop the music. Thanks.